This always happen to you over and over again. That is, you take a trade, the trade advances to an extent, it turns back after you have made some money and come back and take you out, take your stop loss. All right, this thing happens, and you have been struggling with these problems. Well, I want to tell you what the problem you are facing and how you can sort it out. You are Your biggest problem is that you don't understand the market turning points. The market turning points, those points that market reverses. And again, you also don't understand that even if you even know about turning points, you don't know that there are different categories of turning points. There is a short-term turning point, there is a long-term turning point, and there is a medium-term turning point. And even all these turning points are subdivided again. So you don't know this. So as a result, when you take a trade, you make an entry, there is a place where the market has to reverse and even come and take out your entry area, go down a little bit or go down deep and then reverses and still go back to your TP again. All right, that's because there are different categories of turning points. That is to say, like I told you, turning points is that those places where market reverses. You have bullish and bearish turning points. Okay, when it's moving downward and it turns, that's the reversal. All right, that's bear. I mean, when it turns as a bullish trade, or when it's moving, I mean a bearish trade, or when it's moving up bullishly and it turns. All right, again. So now, because you don't understand all this, you take your trade and you take your TP probably in long term or in a medium term turning point, where you are supposed to take your trade in short term turning points from that point of entry. All right. So because you don't understand any of this, the market will always come and take you out. Now I'm going to give you vivid explanation using the chart. All right. But if you are on YouTube, of course, it's going to continue from this video. But if you're not on YouTube, you need to go to YouTube now and go and watch the full video. The full video is about 30 something minutes. All right, I explained everything using chart demonstration to show you from the trades that I have taken how you can use the turning point, how you can understand the turning point, and most importantly, it is the sniper entry trading strategy. The process of knowing it will help you to figure out and understand and master different market turning points as you see them on the chart. You'll be able to identify them and make good decision in terms of your entry and exit of your trade. So go now, if you are not on YouTube, to go and watch it. If you are on YouTube, okay, I'm going to be dropping the link. All right, the link to my YouTube is in my bio. If you're on TikTok, all right, you can find the link to this particular video on YouTube in the description section if you are on Facebook. All right, if you are watching from Facebook. All right, and if you're on YouTube, of course, just continue the video. Is going ahead from here. So, and if you're on Facebook, you can also go to my profile and find the link to my YouTube link, and you'll be able to find this video. It should be one of the latest videos right now. All right, in the video session. All right, so go and watch it now so they can understand how to take care of this problem of you taking a trade and it's coming back to take you out and then still move to your direction because you don't understand the turning point. This is the magic of the sniper entry trading strategy.
Let's get started. This is USD. So let's go into Rwanda broker. Show me Rwanda now. Okay, that's Rwanda. Okay. Oh, good. That's what my broker actually use. I'm not trying with Rwanda broker, but that's what my broker use. I've been able to find out. All right. So these are trades that I've taken. Okay. Let's since this week when market open, this is the first one. You just hit TP yesterday. All right. This over $200, 0.01 loss size. This is 0.01 loss size. This is 2,000 pip. All right. That's the only trade that was taken. That actually was taken. I mean, one of two trades that actually was taken on Monday. One of two trades that was actually taken on Monday. This is the second one. This one is also almost 1,000. This is 1,600 pips. All right, 1,600 pips. Let me verify. I mean, let me show you 1,600 pips. I'm sure you can see that. All right, that's it for Monday. You see two huge trades on Monday, but actually hit TP Tuesday. So these are other trades that I took. All right, so this one is just 160 pip. I'm coming so that we talk about, and this is 1,000 pip yesterday, and this is also about 500 pip yesterday. So you can see three trades yesterday. I didn't have time to even take trades yesterday, actually, although the market didn't really move much. But I was able to spot these three trades as well. Why these two on Monday? So let's talk about the reason why we are here. We are here because I want to show you short-term turning points, long-term turning points, medium-term turning points. All right. So that's what I want to show you so that you understand how the market moves, so that you'll be able actually to take advantage of it, or so that you also know the reason why you have been losing your trade, like I told you earlier. All right. You have to understand the turning points. You understand the turning point in short term, long term, and medium term. What is going to happen? You will not be losing out. You know where to take your trade and where to exit your trade. Okay, so let me zoom in a little bit so that let me start from yesterday's trade. All right. Okay, let's go. So let me zoom so that you can. So this 15-minute time frame. Of course, if you have watched, go and watch my videos and see how I take my trades using sniper entry trading strategy. I think that will be good for you. All right. So now look at this place. This is one of the short-term turning points as well as this one. But look at this trade. When I took the trade here, or should we go to 1 minute where I actually enter the trade going so that you know? 15 minutes is my entry time frame, but I observe my turning pattern in 1 minute. Okay. So when you see this place, why is it that? Okay, let me see if I can do something better. Let me do this so that it will be better. All right. So look at the trade I'm talking about. Now look at this. Why did I take just 160 pips here? And you can see he hit my TP. Okay, let's talk about this rejection. All right. He didn't go past here. How did I know that? This is what I mean when you study and understand how to use sniper entry or any other strategy that can help you to bring out things like this. You'll be able to spot it. You will know when to take your profit. Imagine that here I wanted to take my profit maybe around this zone or bring it to this zone. You see what has happened here? This is the last time he visited and did. This one is even an opportunity to enter. You can see that I entered it here. I took another trade here. And coming to this point, you see what would have happened. We will just get rejected like this and then goes up. Take me out. Which stop loss am I going to use? Look at my stop loss, because this stop loss is about 12 pips. Yeah, 12 pips. Let's say 13 pips and not that. This trade alone is 1 to 12 is to reward ratio. So it's about 12 pip, because I mean you can see that because it's 160 pip TP that I did. It's a trade. All right. I will later go and use one of them to show you how I take them from 1 minute time frame so that you understand. All right. So you would have taken me out, completely out, completely out. You see that? So that is the point I'm trying to make. Now look at this particular trade. If I had not taken it, to look at here, it came to hit my TP here. All right. You see that hits the TP here already. For this, in fact, for all of them, this is the point where the TP of everything since on Monday before yesterday, Tuesday, because this is Wednesday. This is Wednesday. I think today should be 15th, Wednesday 15th, April 2026. All right. This is the time that all the trade materialize, except for this small one here. All right. So, but look at what I want to explain here. Look at this very particular trade here. You see, this is not safe yet. All right. It's not safe yet. I've not gone to observe whether a turning pattern has occurred. All right. It's not even safe yet. All right. Because even if it's going up now, it will contend with this zone. Look at this place, probably previous resistance or support here. All right, and contend with this other block, and there is invisible other block here. So all these are areas where the trade can come back without going past this place. These are possible to happen, and if that happens, this trade can come. Look at bearish other block here. The closest bearish other block to the price. All right, and the price are not reached. This is it. So if you come here, it certainly has taken, we take this one out. So if I did not put my TP here, it would have taken me out. So you see, your ability to understand the turning points, both bearish and bullish turning points, is the key thing. If you don't understand it, you take your trade and then it comes to take you out. Just like we said, this trade came here, giving 160 pips. 160 pips of gold is huge, all right? And then I didn't set my TP here. For instance, it would have come out and take me out at this zone. It would have taken me out at this zone. After doing 160 pips compared to the stop loss, which is just about 13 pips, all right? Something that's giving you 1 to 12 risk to reward ratio. So it means that you have gathered enough money for your capital self. You understand? Or comparing to your risk, you understand? And then the market came back and take you out because you don't understand the short-term turning point. When you were taking this trade, you are aiming here or you are even aiming here, and you never get there. Do you understand? That's what I'm talking about. And now see all these one, like these ones. Let me take this one as, let's take it as medium term, because I won't even take this one as long term. Medium term, okay, let's take it as long term. Look at this. After putting this trade here, look at where I took it. I took it where price has decided, gone this way, wanted to come back, but stopped here. All right, I've gone. There are points of coming to come back and stop, just like here. All this place gone up and decided to stop, but none of them came to this zone at all, because I'm able to figure out the long-term turning point, all right, and where I should be taking my profit. So this thing happened since Monday midnight. When was the time it hit TP? Since Monday midnight. I'm talking about from the first trade. That's Wednesday around 02. That's today. So today, Wednesday, around 2 a.m. in the morning. That is when it hit TP. Since Monday for those ones. But you can see this one. I took it on Tuesday and exited immediately on Tuesday. Did you see that? All right. So this one, I took it on Tuesday and exited, of course, this Wednesday morning. All right. So this one now was the last trade I took in the night before I left. All right. That is it. You can see this place that I talked about now. See this place that we're looking bullish. You see that it's beginning to go bearish, which means, like I said, this place is not, this trade is not safe if I'm not taking my profit here. So that is the beauty of understanding short-term and long-term turning points. And apart from that, the sniper entry help you to take a very sniper entry that gives you a very reasonable, good risk to reward ratio. That's why I say it takes care of your risk management. Risk management, it takes care of it. I was able to take this trade here. What am I risking? I'm risking about, let's say, this is $37, approximately $37. Look at, yeah, this, I mean, 37 pips. 37 pips. All right. You can see this place where the right stop. Look at that right place, the right stop. Then 3.696 from these two. All right. That is representing, the 3 is representing 30 pips. All right. And then the 6 something is representing, of course, 6 or approximately 7 pips. So that's why I call it 37 pips. That's what I'm risking. And what is this trade? The TP. Or you go to the top, you see the green area. You see 52.4 something. That has 520 pips. All right. So less than 40 pip. All right. For 520 pip. And what's the risk to reward ratio? You can see in the middle here, open P and L. You see that is gone down. You risk to reward ratio. Are you seeing it? That is 1 to 14 risk to reward ratio. Did you see that? That is how to read it using this particular tool. Do you understand? So what we want to do now is that I'm going to go to 1 minute time frame. I'm going to show you a little bit of how I take my trade to get this kind of risk to reward ratio. 30 pips. What this means for somebody using $10 is, okay, 30, let's say 37 pips, let's say 40 pips save. What for 0.01 loss size, if you are using it like me, I don't have big capital yet. I'm still, all right. I don't, in fact, let me say I don't even have capital yet. You get that? All right. So now, 0.01 loss size means what? $4. Let's say this is 40 pips stop loss. That's $4. What about the TP? That is 520. That is $52. All right, for TP. And you are, if you lost this trade, you'll be losing, let's say approximately $4. Do you get $4? That's what you are losing. But if you are winning $52. That is it. That is what sniper entry can give you, whether it's small or big. Let's go and use the big trade to see my stop loss and all that, and the way I took it. Even though they are big, it doesn't really matter. As far as you understand the turning point, that's what matters. All right, so let's go. Let's go. This one is 1,600 pips TP. So, but the stop loss, I want you to take a look at the stop loss. The stop loss, I think we should go to 1 minute time frame for me to show you some of these things. But I'm coming. The stop loss, let me lock this thing so that it will not shift. You see this stop loss? This stop loss is go to the down, you see the red part. Are you see what are you seeing there? Should I zoom in more? Should I zoom more? So let's zoom more so that people can see it clearly. All right. So you see what is written there at the down there. Stop 2.9 something something. This is exactly 20 pip. 2 is 29. Okay. So now what I have in 29 pip, well, I call it 30 pips. 30 pips for 0.01 lot size is how many dollars? It is $3. $3. So you with 10 naira, $10 account size can trade this. Once you can understand sniper entry, you'll be able to enter this trade. You take it. Do you get it? You are risking just $3 out of the $10. And what are you winning? You are winning $160 because it's 1,600 pip. So with your 0.01 lot size, I just want you to see it. See, you see target at the top. Go to the top. You see the green thing displaying. Target 160 point something. That 160 means 1,600 pip of gold. Do you understand? Do you understand? That is a 1,600 pips of gold. That's what that is. That is $160 for your 0.01 loss size. Did you see it? You see, some of the bigger trades, their stop loss is even smaller than some of the smaller trades that I've taken. Did you see that? So it doesn't really matter. What matters is your sniper entry trading strategy, how you are able to craft, to understand it in order to use it effectively. All right, so let's check this bigger one, which is over 2,000 pips. So let's just check it. Let me zoom in so that you can see it properly. Let me zoom in. To learn this strategy is not simple. For those people who are ready, when you are ready, you think that you have a future in Forex, you have to be ready. You have to do everything you can in order to grab this knowledge. And you will simply just be trading like this. Okay, let's see this. So this one now, you can see, look at the down. What do you have? Stop for the red area. Stop. What did he say? Stop. After stop, you see 2.7. That is 20 pips. All right. That's 27 pips. Let's call it 28 pips. 28 pips. That is so 0.01 lot size is about $2.80. All right, $2.80. So it's not to $3, but let's say it's $3. Let's say it's 30 pips. That is $3. That is $3 you are risking. The risk is $3. Let's go ahead and see. Now the risk to reward ratio of this one is 1:79 risk to reward ratio. Look at it at this center, the green area. After you see open P and L, then come down, this risk to reward ratio. Then you see 79 point something. That means 1:79 point something risk to reward ratio. That is what you are doing if you target this. You can only do this if you understand the long term, short term, and medium term turning points. So, all right, I'm going to use this one to explain to you the turning points too. Just one trade because this video is getting too long. All right, so look at the top. You see target is 215. That's 2,150 pips. I'm just taking it. I'm not taking the one after decimal. Just the first one, the whole number. 215. That's 2,100. When you say target, 2,150 pip. What does this mean? $215. With using what stop loss? Let's approximately $30. 30 pip stop loss, which is $3. $3 to win 200 and something dollars. I'm just saying this because I've been talking about small accounts, small accounts. Imagine if you have big accounts, what can you do with this one? All right, all right. You see, the reason I'm not bothered, I'm still trading small, small and doing my thing, other things until I get ready to trade full time. All right. Because I've captured the strategy, I'm showing you guys now how this thing works. Because when I start trading, I'm not going to get time for now. I'm not going to understand. That is time where people come and be disturbing me, chatting me up, and you will not see my response. So if you like, be laughing and don't pay attention to what I'm telling you. And then when you look for me, you will not find me. All right, so let's go to 1 minute time frame so that we can go. Let me explain other one or two of the trades, how I took them. All right, 1 minute time frame. All right, so I explained to you how I took them. See, I say I refine my turn. I refine my zones to 15-minute time frame, but I use 1 minute to observe the turning point and turning pattern. I mean the turning pattern. All right, and then I take my trade. So let me start from this first one. As you can see, it is not guesswork. It is something that comes with renowned strategy. So you can see from this point, this is the zone. All right, this is the zone. Even starting from here, now this is the zone, but I didn't meet it here, so I didn't bother about here. But I already know that it has started moving. All right, since I started moving, remember all these zones are marked out, refined to 15-minute time frame. It is not 1 minute zones. All right, I don't consider the 1 minute zones except you want to scalp. All right, so now after coming to this place, this is a typical, you see, this is a typical behavior of a turning pattern right here. Now I missed it all from this very particular point. I didn't spot it from there, but they are all working within the zone. You see, this place, when I got to this place and I begin to see higher low, higher low. Do you see that? Did you see that? Did you see that? And then immediately I see this one that looked like more equal low here when I was here, and then you see breaking below it, this candle rejection from here, all right, more like clearing small liquidity around this area, and it produces engulfing. So this is now bullish engulfing, and this bearish is rejection. Sweet place to take your trade. Remember, it's within your zone, and that is how I took this one. So you can see it. You can see from the candle where I took it 1 minute. So that is giving me approximately 30 pips. Remember, it's not up to 30 pips. It's okay. I mean, approximately 40 pips. Remember, it's not even up to 40 pips, but approximately to 40 pips. Like that is $4. You are losing to win 50 something dollar. Let me go to the big one, the earlier state, I mean trade. Well, let me still talk about this one. I'm sure you are seeing this. You are seeing this right here, right? You are seeing this. So within the zone, you can see, first of all, there are some people that talk about size of other block. Look at this, the size of the other block. You mark it when you have done your analysis. Determine the size of the other block, because that is within the range you'll be watching out for your turning pattern. That's what you should know. So now you see again, look at these two places. Let me just hide this so that you understand. Look at what I've explained. You see, this one is similar to what I explained before. Look at within the zone. Here is within the zone. Look at what happened. So this is like double bottom, right? This is like double bottom, but look at this place now. Look at this place. This piercing pattern here. Now this piercing pattern here. See, this bullish is like a hammer. There's piercing pattern. Combine the two together. Even this one, a variation of hammer, because there is a small rejection there. But there's a rejection here, like piercing pattern, and then rejection from the bullish candle. It could be from the bullish or the bearish candle. So it's time to take it on the candle close. All right, as the candle is closing, you are taking. If you don't take it here, you can take it here. All right, and you fly. That is exactly it. Did you see it? And then what is the stop loss? The stop loss is about 30, 31. Let's say, call it 32 pips. All right, that's $3.20. All right. To win what, Kwano? To win a huge sum of $160. That's 1,600. Okay, this is 100. Oh, this is 100. That's $1,000. So here is just $100 immediately they are going to get. And what the risk to reward ratio? The risk to reward ratio is 1 to. The risk to reward ratio is 1 to 32. All right, talk about it. So let's go to the. Let me just go straight to the elephant in the room, because this this video has become too long, but it's good for you to understand what you are looking at in sniper entry. So I will need to come and be explaining this one. Okay, let me just do this so that it can be faster. Okay, let's go to it. The last one. So after I've been explaining this one, okay, let me just talk about the I don't know if I've okay, I don't think I've explained this one, but let's just go for it. Let's just go for it. Let's just go for it. Uh, have I explained it before? Maybe I've even explained it. Okay, so this is just the same thing anyway. All right. All right. So you can see the same thing around here. All right. You can see this point and this point. This one is more like within my zone. Remember, all these things is when you get into your zone, before you begin to check out all these things. All right. So you can see this a higher low. All right. This low is lower than this because this is higher. All right. Within the zone. All right. All right. Look at all the rejection here and all the rejection here. But there is a lot you need to learn about studying your candle very well, because that is the key here. So, and eventually I had to take it after this candle close here. Especially, you see, I always like to take it with the one with rejection. All right. And this one ran for, this is less than 30 people. When I call it 30 people, and what did we get in terms of risk to reward ratio? What do we have in terms of risk to reward ratio? And this is 1 to 54 is to reward ratio. All right. And what is the TP? The TP is 1,600 pip. That's $160. $160. You see, go to the top target and you see that. I think I've talked about this before. So let's go to the last one. Let's go to the last one. That's the Monday. Okay. You see, with sniper entry, you find trade. You just be seeing trade opportunities. It's not like when you wait for weeks or wait for a very long time. You see, this is not scalping. You can see the number of pips that is doing. At least within two days, you are catching thousands of pips like that. It's only sniper entry trading strategy that is capable of helping you to master the chart like this, that will be spotting opportunity when others are not really seeing the opportunity. All right, as you can see, this is the size of this zone in this particular place. Let's see if we can have trying to get this place, to get this where it will be easy to really explain. All right, so you see more after you enter the zone. Look at the starting of the other block. This is the end of that block. Like I told you, other block, your zone should have a size, right? Other block should have a size, your zone should have a size. All right. Then you see at this point, all right, after this low, then after doing this low in my zone, I just have to, just like I've explained before, I have to take the trade. And this is less than 30 pips. Let's say 30 pips. That's 3 pips. I mean $3. And what is the TP when you go to the 2,000 and plus? That's $215. That's what that is. So now let me go ahead and explain to you, why am I taking this place and take profits? Why? Because you see, all the trade that took them to that point, and you can see this line is different from those other lines there. So why did I take this place and take profit? That's because of the confluence is performing. I mean, it's performing as a confluence. Let's go to 15 minutes so that you can see that better. So you still see it. This is the line. Let's go to where it came from. That line has functioned as support term resistance. All right, support term resistance, and it's in between other blocks. So that is in between two other blocks, both the one below it and the one above it. Like I told you, those red line, they signify bearish order block. All right. So from my study and from the use of this particular strategy, like I said, you study to understand what the markets normally do. That is just the thing. You study to understand what the market normally do. That is the essence. I mean, what you need to go through exactly how the market does it, not just, you know, you have to understand exactly how the market does it. So we are going to, all right, you can see at this point, let me use something to mark it. What should I use? You can see that, should I use Eclipse? You see this point, right? And then I'm sure you can see this point. All right, that is one criteria. All right, let me see if I can get we'll come back to this point. Let's do it normal. Sorry, this thing is getting too long, but I'm sure if you are ready to trade and to understand what you should be looking out for, or to why you should learn sniper entry, or why you should refine your strategy to get to this, to handle trade the chart like this, then you have to watch and see, because you have to be convinced that all these things are possible. All right, before you can work on it. All right, this is the line. All right, so let me just do this so that you see a lot of those things that I showed you. The places where he has served as, look at support here, served as resistance here. Did you see it? Now look at the closer market area. Look at the closer market area. Also, there are a lot of things you need to learn in order to be able to handle the chart like this, of course, to understand how they work. Learn them independently, not fast because you are rushing. No, settle down and learn them. You see here, even at this place is functioning as area of resistance again, and for here area of resistance, and here it functions as support on resistance. So you see all these are consideration where I used to set it as my TP. All right, these are consideration where I use it to set my TP. Now look at this. This is a very shorter block in between. There is another very short, very close like that. They're having boundary by this one turning by this support on resistance. All right, and that's why I put my TP on this line. All right, and this is also the point where we are looking at if gold should beat this zone, especially this zone here. Now we should start proper uptrend, because it's still bearish even at right now. It has not mocked up the bearish the bearish zone completely. You get, and you can see this is the line here where the current market price is. You see this market has been moving down. You see what I told you earlier on when we started. Are you seeing it? You do not take profit here, this trade will be in danger, though it's still safe for now, but it's a matter of time. Can you see that? So understanding your turning point, short term, long term, and medium term, is very, very important. And you can see where I say this TP, you see that this thing, there is another block below it, and there is another block above it. So that you can see that this where eventually went to hit. Let me zoom. Where eventually went to hit is the other block above it. Did you see it? The one that is below, all right, I mean that that it was heading towards the other block above it. Did you see it? So understand that. All right, I've explained to you there are a lot of things you need to learn to be able to understand this thing, because there are different scenarios that will play out at different time and also at different market cycle. So the only way you can't do guesswork to understand this. The only thing you can do to settle down and learn, and you see I've had videos how to start this strategy in all my platforms, YouTube, TikTok, you get Facebook, they are all there. So you go and find out from those videos, 3-way process for learning and mastering sniper entry trading strategy. And you go to my live sessions and see how I marked my key zone, like all this one that is here now, especially when you go to March 15th and March 8th. Those 2 days, I can remember them very well. The others I can't remember. So you just go do your research. That's what you need to do if you want to really be a great trader. So guys, I guess we should call it a day here. See you another time. We'll spend a lot of time doing this, and if you have benefited, of course, don't forget to like, comment, and share this video. All right. I will see you another educative video that I will be making some other time. So bye for now.